All right, so this morning, Goldman Sachs, they rang the bell, folks. That buy the dip bell. You know, just imagine, you know, those old Westerns when they used to come out for the ranch hands. It's chow time. It's chow time. They say, well, Goldman Sachs, it's ready, right? And they point to the fact that this is very similar to the pullback we're seeing, this loss of momentum, right? And also they say the technical setup is just right. Now, of course, the only caveat they add is that NVIDIA reports next week, and that could derail everything. But other than that, they say they're ringing a bell. As I've noted on this show for so many times, buying the dip, folks, is wonderful. It works. Only year it's worked better than this year is 2020, 2025. And by the way, I think it's worked really well since March of 2009. This has been a moneymaker. Now, of course, there's several problems for many investors looking to buy the dip, including the dip itself. It can be kind of painful. Here's the irony, though. The greater the dip, the greater the rebound. So this is like after 63 days, a massive pullback, 16%. But look at the rebound, almost 30%. Can you deal with it? Can you handle it? Is it worth it? And the question is, how do you actually buy the dip, particularly these tech darlings? Well, my next guest is here to help. I'm going to bring now Siebert Financial Chief Investment Officer Mark Malek. Mark, in Axios today, you were quoted, and the first thing that jumped out at me was you talked about why is the stock down, right? That's where we begin. If we want to buy the dip, we need to understand exactly what we're buying. Explain the differences between the two risks.
Sure. So systematic risk is really just market risk, right? So all stocks move up and down with the market. And the idiosyncratic risk, that's based on risk associated with a company. So you often see situations where the market's down, and I'm sure you've heard the old adage that all boats go down with a sinking tide.
Right.
They all, in fact, do. There is this thing where, you know, higher beta stocks tend to go down a little bit more than the market because that's how they work. And when the market goes up, they go up more than the market, right? And that's why you probably saw that effect of the chart that you showed just prior.
Right.
But in terms of what we look at, we want to always be watching, of course, for the idiosyncratic risk. The individual companies, has anything changed in the company? And that's the stuff that we focus heavily on.
Yeah, and it's interesting because a lot of my guests who come in and they recommend these higher beta names, I always throw out the caveat, if they don't, hey, you got to have a certain personality to own these stocks because, yeah, it can go up 30%, but it can also make some sharp pullbacks. So let's talk about this AI thing is, you know, the reasons not to own AI winters, it keeps recurring. Not long ago, there was this notion that there's no way you could get the money back. You remember this, June 2024, the $600 billion question. Yeah, they're investing all of this money, but they will never get it back. And that put a lot of pressure, right? The AI bubble, this is ironically from Sequoia. And I think it's interesting because reading your notes, you think this is actually one of the reasons to buy these stocks, the value proposition of all the money they're investing in this stuff.
Yeah, I mean, look, it's easy to call this a bubble. All right, stocks, a lot of them are priced to perfection. The market's trading right below all-time highs. You're getting day after day highs here. And we've been talking about this quote-unquote AI bubble. You know, I like to call that, you know, a news headline in search of news, right?
Right.
Because the fact is that, you know, these markets do have a lot of room to grow. This is just the very early stages. These are the very beginnings of this expansion at this point. And so, of course, not all companies are the same. Clearly, some companies haven't been able to get a return on that investment just yet. But the ones that we're heavily focused on now, the ones that have been doing all the pulling in the market over the last 6 months, those are companies that are already getting return on those investments. We see them.
And you've got strong conviction there. It's sort of a line that you had. It reminds me of a line that when I was a broker, you know, we get on the phone and like, hey, Mr. Jones, yeah, the stock is down, but if you liked it at 20, you'll love it at 10. Let's buy some more. If you have conviction in a stock when it's expensive, you should like it even more when it's cheap. But this also means that you have to kind of understand what you own, though.
Absolutely, right? So, you know, it's very easy on the surface to say, oh, this stock is expensive. But you have to recognize that a lot of the models that we build on the valuations of these stocks, they're looking 1 or 2 years out, right? So I'm very fortunate in that we can look long-term 4, 5, 10 years out. Not everyone has that time frame.
Right.
But if you do, and you can hold on for that time frame, you'll see that just slight changes in the growth trajectory significantly change the valuation of a stock, right? So, you know, we have to do that constant analysis. Of course, that is math, but beyond the math, it takes an understanding, as you say, of the market and understanding where those growth areas can happen beyond the horizon of your
So let's talk about pulling the trigger on the buy and a dip. Yesterday, Palantir continued its major tumble, and then it had this remarkable, this is a candlestick chart. I love this candle right here because it climbed off the canvas, almost finished higher, was gapped up today. By the way, and the volume was there, right? I mean, would this be a potential buy signal for someone like you? Just the action in the stock yesterday?
It was a buy signal up here at 185, and it's a buy signal down here. You know, the fact of the matter is nothing has changed materially with our thesis on the company. In fact, it has only strengthened. So when the stock trades down like this, we still maintain the same conviction that we had earlier. Sure, we'd like to buy it all down here, but the conviction hasn't changed. And this here candle chart here just shows that the market is seeing the same thing. This is an aberration of what I believe in.
Good stuff. Mark, love your work, man.
Thank you.
And love the bow tie.
Thank you very much.
Thank you very much. Appreciate it.
Great